Okay. Hi, Jimmy. It's Sunday
Hi,
again.
Ian.
How are you doing?
I'm good. Thank you very much. Happy New Year to you.
Wow, Happy New Year. Okay, so of course, for those who are seeing us for the first time, welcome. This is Investing Bro Market Talk, episode 17 already. Don't play. Okay. So anyway, so this is where we will try to see what happened over the past 1 week and give our insights, Jimmy's and myself insights to how we can actually make use of the situation. So of course, last week, I would say this is more than last week. The REITs price have actually corrected quite sharply. Okay, so of course, we want to show some figures, and we will each share, myself and Jimmy will share, this kind of situation, what are some of the opportunities we can capture, or either that, what are some of the investment strategy we can do because of this occurrence. So Jimmy, shall I start first? Is it okay with you?
Yes, please go ahead.
Okay, so let me just share my screen. Okay, so before I talk about what am I doing, so let's look at some background information first. So for those who have been following the STI market since I would say January, yes, STI has a very good run. Okay, so by the way, some statistics. So 31st December, STI is about 3123, and today we are looking at 3004. Basically, STI has moved up by 10% really in this short period year to date. Okay, but very interesting. So this on the right, the table on the right, or the chart on the right, is actually the chart of S-REIT Leaders Index. So I use it as a proxy for the REITs market. So you can see that the timing is the same. While STI move up, okay, the REITs market is coming down. Okay, so the question is, does it make sense to you? So of course, some people can argue that yes, because of inflation, because of the pending interest rate increase, the REITs is actually affected. Okay, sure, I acknowledge that now, but from my perspective, I think it's a little bit of oversold. Okay, especially like, come on, the interest rate don't just affect REITs, it actually affect other instruments as well, or other companies as well, and yet it go up for STI. So I believe there is an element of oversold here, and there is some form of overcorrection. Okay, so this is my point of view. Of course, this is my analysis, which may or may not be correct. Okay, but the more important thing here is this. So seeing such thing happenings, what we can do about it. Okay, so I just want to talk a bit about my REITs investment strategy first. So basically for REITs, I have different portfolios. Obviously, I have a REITs portfolio, and my REITs portfolio is to help me generate passive income. Okay, of course, you can use REITs for different things. For me, I just want to buy and hold, okay, and eventually depend on my REITs for my retirement. So for those who have listened to my talk before, you probably heard it. Okay, on the day of my retirement, probably 70% of my money in REITs, then I just enjoy my passive income. So I am actually at a state of just accumulating REITs. Accumulating REITs. And as for this period, I just do a simple dollar cost averaging to accumulate. So every month I'll spend about same amount of money, okay, to buy REITs. Okay, every month just buy REITs, whether the market up, market down. Okay, as long as I can find REITs that fits my criteria, I will actually go into it. Okay, so simply put, this is my process. So at the end of every month, I will actually do this 3-step to help me select my REITs, and of course, eventually choose one or two of them, okay, which meet my criteria the best, and I will invest in them. Okay, so what is this 3-step process? I will compare the current yield to see whether is it above the fair yield. Okay, so of course, from here, I will filter out some REITs, and for the REITs that pass this test, I will actually look at this. Is there rental growth for the properties, or either that is the rental likely to be sustainable? Or basically asking this, do I like the properties? Okay, and again, down here, we filter off some. And for those who pass, I will ask one last question, which is, do the loan related test. Does it pass some of the financial analysis criteria? Okay, so of course, this period, nothing changed for me. It's not that, oh, okay, the REITs price drop, I'm going to buy more REITs. No, no, I'm still doing dollar cost average. So one thing about investment is to be disciplined. Don't try to be opportunistic. So for this portfolio, I decided DCA, stick to it. Okay. But what is interesting to me this period is that obviously because of the price drop, the current yield is higher, and I see more REITs meeting this criteria. Okay, I see more REITs meeting this criteria, and obviously I got more to choose from for this particular month. Okay, now y'all may be asking, what is this fair yield? What is this fair yield? Okay, so this is the way. This is my personal way to help to see whether the REITs is cheap or expensive. So what I did here is this. I basically try to figure out, okay, the average dividend yield for all the REITs in the same property sector. Like for example, down here, all the retail REITs. Okay, I find their average dividend yield over the past 3 years, and I have collated this thing, the fair yield. So it just serves as a very simple benchmark for me. So obviously, if let's say the current yield is higher than the fair yield, I think the REIT's price is undervalued. And of course, if let's say the current yield is lower, I think the REIT's price is slightly expensive. So it's just that for the fair yield, the additional rule I have here is this: for the REITs that I like, I'm happy to reduce the fair yield by 1%. Okay, so this is how I actually do my REIT selection. And obviously, because currently the price drop, current yield higher, I actually see more REITs able to meet this criteria of mine. Okay, so this is the spreadsheet I do. Okay, of course, monthly I do it now. Okay, of course, sometimes not so formally, but every month, okay, I will actually do this to actually seek out REITs that is above my fair yield. Okay, then of course, this spreadsheet will also show, like, for example, what is the gearing ratio. Okay, so to pass my test, this have to be less than 40%. And remember the second bubble, the part whereby to see whether do I think the rental will be growing, or either that, is the rental sustainable? So basically is me asking this question, do I like the properties or not? So this is very subjective. Okay, so based on personal preference. So, it doesn't mean that whether what I like is the best, what I don't like is no, it's very subjective. But I think this is an exercise that we should go through. Okay, so this is what I do. And like I said, because the price drop, I find more REITs meeting the criteria, and there's actually more for me to choose from for this month. Okay, again, I want to stress, I'm not going to buy more because of the price drop. I'm doing DCA on REITs. This is my strategy, and just want to stick to it. Yes, like I said, we definitely like to help provide more education. So if you think that this spreadsheet is actually going to be useful to you, give you a better understanding of how I do my stock selection, you can just scan the QR code. Okay, you can scan this QR code, and you can just drop your email there. Okay, we'll be happy to send this spreadsheet to you for reference. So please take note, this is definitely not stock tips, whatever. Okay, we are doing purely for educational purpose. And for this spreadsheet, okay, the numbers is actually from readdata.com. That's a source. Disclaimer, we cannot be responsible for the accuracy, and definitely not liable for any investment action. So yes, if you think that it's going to be helpful, you can scan. Okay, like I said, we just want to share for educational purposes. Okay, yep. So this is what is happening to me. Okay, REITs price drop. I got more choice, but I'll still stick to my REIT selection process. Very disciplined, and of course now I have accumulated quite a sizable REITs portfolio, enjoying the dividend. So that's me. That's my REITs investment strategy, and of course that is what's going to happen for me this period. So Jimmy, I know you are doing something different. Would you like to share, please?
Yes, of course. Hey, thank you, Emin. So my strategy is pretty much similar to what Emin is doing, but of course, being very lazy, I personally prefer to have ETF instead of looking at individual REITs. And my strategy is very much similar to what Emin is to buy on a regular basis. I put all my ETF under what we call regular saving plan. So every month, automatically, the money will be deducted from the bank and go into this ETF on a regular basis, without me having to worry about, how much to buy, or if I'm worried about the price is up or down. So in any way, I will still continue to buy. I just want to show you what's happening on the ETF side of things. So this is a Lion Philips ETF. As you can see that the channels is showing that it's on a little downtrend. On the 31st of January, the price actually plunged quite a bit. I mean, at this point of time, if want to say, if I want to buy additional on the dip, I don't mind buying, because when the price drop, the yield actually increase, like what Emin has mentioned earlier on. But even if I miss it, I don't care either, because the bank and the broker will automatically buy some for me at the beginning of the month. So I probably will have captured a few units on this price level as well. So yes, this is basically a lazy people, like myself, don't have time to look into individual REITs or to analyze each of these REITs. Then a basket of a basket of REITs with an ETF will actually solve the problems. All right, so that's all from me, and I'll pass it back to Emin. Thank you.
Thank you so much, Jimmy. So so this is our insight. So again, please think of disclaimer. We just want to share with you our investment strategy. Can the REITs price fall further? Okay, what it bounce up? Seriously, nobody knows. $1 million question. Okay, but to us, like I said, we are very focused on the strategy rather than trying to time the market, which is almost impossible. So the right strategy is actually more important, and hopefully we give you a sense of how we actually plan our strategy and execute our strategy. Okay, so with that, thank you so much. If you think that this video has been useful, please do us this big favor. Click on the like, click on the share, so that more people can benefit, and most importantly, motivate us to do more of such video. And again, let's say if you're interested to get my Excel spreadsheet, okay, I will actually paste the link related to this video. Okay, so you could actually get it on the comment section to find the link, and of course, if you miss that QR code. Okay, so with that, thank you so much. And I think it's still not too late to say Kong Hei Fat Choi, Happy New Year to everybody. Okay, bye.